Hello all, this is Dr. Shivagami, Assistant Professor, Department of Commerce General, Shift 1. In this presentation, I'm going to explain about functions of RBI. The Reserve Bank of India is the central bank of our country and plays a vital role in the economic and financial development of India. It was established on April 1st, 1935 under the Reserve Bank of India Act 1934. The main purpose of the RBI is to maintain monetary stability, regulate the financial system, and promote economic growth. As the supreme monetary authority, it formulates and implements monetary policies, manage currency, and ensure the smooth functioning of banking sector. The functions of Reserve Bank of India are broadly significant, covering various aspects of the country's financial and economic framework. RBI functions are divided into two groups. One is monetary functions and another one is non-monetary functions. Issue of currency, bankers to government, banker to bank, manager of foreign exchange, and control of credit. These are all comes under monetary functions. And collection, publication of data, regulatory and supervisory, development and promotion. These are all comes under non-monetary functions. Monetary functions of the Reserve Bank of India refers to the activities that are all directly related to managing money, credit, and financial stability in the economy. These functions help the RBI control the supply of money, regulate interest rate, and maintain price stability. By performing these monetary functions, the RBI ensures smooth economic growth and prevent inflation or deflation in the country. That's why the main monetary authority of the country is RBI. It formulate, implement, and monitor the monetary policy, as well as it has to ensure an adequate flow of credit to productive sectors. Issue of currency is one of the most important monetary functions of Reserve Bank of India. The Reserve Bank of India has the exclusive rights to issue currency notes under the Reserve Bank of India Act 1934. As a sole authority to issue currency notes in the country, the RBI ensure the availability of adequate and genuine money for smooth economic transactions. These functions helps to maintain public confidence in the currency system and prevent the circulation of fake notes. The RBI performs these functions through its issue department, which is fully backed by assets such as gold, foreign securities, government bonds, and ensure the stability and trustworthiness of the currency. The main objectives of issuing currency is to maintain an adequate supply of money according to the needs of the economy and to replace damaged or old notes in circulation. The main objective of issuing currency is to maintain an adequate supply of money according to the needs of the economy and to replace damaged or old notes in circulation. By controlling the issue of currency, the RBI also prevents the problem of excess money supply, which can lead to inflation. The next monetary functions of RBI is banker to government. In this role, the RBI performs various banking and financial services for both central and state governments. It manages their accounts, handles public debt, and provides short-term credit when it is necessary. These functions help the government in managing its finance efficiently and maintaining economic stability in the country. As the banker to the government, the Reserve Bank of India performs several important tasks similar to those performed by a commercial bank for its customer. The Reserve Bank of India maintains the deposit account of the central and state governments. receive and make payments on their behalf, and manage their public debt by issuing, servicing, and redeeming government securities and loans. It also provides short-term loans and advances to the government to meet temporary financial shortages. The RBI advised the government on all financial and monetary matters, including the formulation of economic policies and managing the fiscal deficits. The Reserve Bank of India acts as the banker to all commercial banks and other financial institutions in the country also. In this capacity, the RBI provides essential banking services to other banks, just as commercial banks provide services to their customers. This function helps to maintain stability, coordination, and confidence within the banking system and ensure the smooth functioning of the entire financial network. As the banker to banks, the Reserve Bank of India performs several important roles to support and regulate the operations of commercial banks. All commercial banks are required to maintain a part of their deposit as reserves with the RBI, which helps in maintaining liquidity and control over credit creations. So the RBI provide loans and advances to banks in time of financial deficit or shortage of funds. Usually, those instruments like repo rate and bank rate. It also acts as clearing house, settling interbank transactions, and ensures smooth payment system between different banks. All banking operations in the country have account with the Reserve Bank of India. So the RBI plays an important role in maintaining stability, trust, and efficiency in Indian banking sector. The next functions of RBI is manager of foreign exchange. As the manager of foreign exchange, the Reserve Bank of India performs several key responsibilities under the Foreign Exchange Management Act 1999. It regulates and controls all foreign exchange transactions related to import, export, remittance, and other international payments to ensure the stability of the Indian currency. This function is crucial for maintaining the stability of the Indian rupee in the international market and for promoting smooth foreign trade and payments. By managing foreign exchange, the Reserve Bank of India ensures that Indians' external economic transactions are carried out efficiently and that the country foreign exchange reserves are used wisely. By acting as the manager of foreign exchange, RBI plays an important role in maintaining external stability and encourage internal trade and safeguard India's financial position in the global economy. Control of credit is also one of the important functions of RBI. It refers to the regulation of the flow of credit and money in the economy to maintain price stability and economic growth. By controlling credit, the RBI aims to curb inflation during periods of excessive money supply and to encourage borrowing and investment during the period of low economic activities. So the Reserve Bank of India controls credit in the economy through various quantitative and qualitative methods of monetary policy. The quantitative method includes tools such as the bank rate policy, cash reserve ratio, statutory liquidity ratio, and open market operations, which affect the overall volume of credit availability in the banking system. And the qualitative methods, on the other hand, it includes measures like moral suasion, selective credit control, and margin requirements, which regulate the direction and use of credit. Apart from its monetary duties, the Reserve Bank of India also performs several non-monetary functions that contributes to overall development and stability of the financial system. These functions are not directly related to the regulation of monetary supply or credit, but are essential for promoting economic growth, strengthening financial institutions, and ensuring smooth banking operations in the country. The non-monetary functions of the Reserve Bank of India includes a wide range of regulatory, supervisory, developmental, and promotional activities. As the regulator and supervisor, the RBI ensure that banks and other financial institutions operate in safe and sound manner by enforcing various rules, inspections, and norms. Through its non-monetary functions, the RBI contributes significantly to the stability, efficiency, and progress of India's overall financial and economic system. Collection and publication of data. So the RBI regularly gather, analyze, and publish a wide range of statistical and economic informations related to banking, finance, money, prices, and foreign exchange. These functions help the government, researchers, and policy makers to make informed economic decisions and to understand the trends in the Indian economy. The Reserve Bank of India plays an important role in collecting, compiling, and publishing data on various aspects of the country's financial and economic activities. It gathers information from banks, financial institutions, and other sectors about deposit, credit, interest rate, inflation, national income, balance of payments, and more. This information is then analyzed and published in various reports and journals such as RBI Bulletin, Report on Currency and Finance, and Annual Report. These publications provide valuable insights into the performance of the economy and help the government in framing appropriate monetary and fiscal policies. The Reserve Bank of India performs an important regulatory and supervisory function to ensure the stability and soundness of the Indian banking and financial system. As the central bank, it regulates the operation of commercial banks, cooperative banks, and other financial institutions to maintain public confidence and protect depositors' interests and promote a healthy financial environment in the country. As a regulator and supervisor of banking system, the Reserve Bank of India formulates various rules, regulations, and guidelines that govern the functioning of banks and financial institutions. It grants licenses for the establishment of new banks, approves their branch expansion, and ensures that they operate according to the provisions of Banking Regulation Act 1949 and the RBI Act 1934. So, this regulatory and supervisory functions of the RBI are essential for maintaining trust, discipline, and efficiency in Indian banking sectors. The RBI plays a key role in the development and promotion of the financial system in the country. These functions aim to strengthen banking infrastructure, encourage financial inclusion, and support economic growth by ensuring that credit and banking services reach all sections of society, including rural and underdeveloped areas. These functions focus on expanding and improving countries' financial system to support overall economic growth. The RBI encourages the establishment of banks and financial institutions in rural and semi-urban areas to ensure that agriculture, small scale and priority sector receive adequate credit. It also promotes financial literacy and inclusion. Through these developmental and promotional functions, the RBI contributes to balance economic growth and efficient financial system in India. From this, it is clear that the RBI is the cornerstone of India's financial and economic system. Thank you.